Heidi ho, everyone, and welcome aboard. It is another Sunday market update, and we're so glad you can join us wherever you may be in God's great garden on this Sunday, the 3rd of April, would you believe? My goodness gracious me. 1/3 of the year. See ya? Or is it a quarter? Nearly a third. Getting there. Maths aren't real good on a Sunday, I've got to say. That's why we rely on charts so much. And speaking of charts, oh my goodness gracious, Ignatius. Never seen so many spinning tops in my entire trading career, as I can see on the weekly charts of last week. Just a market that's got absolutely no idea where it's going, I believe. Anyway.
Geoff, hi. It's great to hear you. Can we see you?
No, he hasn't paid his bill. The lights are off. The lights are off in Tasmania. The interconnector isn't working. And
that would be, there we are.
That would be because of that. My sincere apologies. I haven't got my driver's license on a Sunday, obviously. Anyway, as I was saying, I've never seen the market so indecisive over a period of a week. I wonder how that's going with you guys. First up, we're going to go to New Zealand, where Australian women have just won the cricketing one-day International World Cup. What a tremendous effort by our girls. Good on you, girls. And Julian was there, front row. Oh, no, he wasn't actually doing something.
I wasn't, but as it happens, I've watched quite a few of the highlights. And actually, I have to say, the Australian ladies looked like they were the winners right from the very start. They were pretty dominant all the way through the tournament. So they were the ones to beat all the way through. And they proved that with pretty amazing performances. So good on them.
Yeah, I thought their fielding in particular was just absolutely outstanding. And good to see. Mate, you're going, speaking of cricket, we're off kilter a little bit, of course. I believe you're off kilter a little bit this week as well. What's going on?
Well, thank you, Geoff, and hello, everybody, wherever you are in the world. Hey, guys, for those of you that have just sat through I'm going to stop calling it my Trader Cafe, but for the sake of argument, my Trader Cafe, for the last hour, we were talking about building trading systems, and we also had a quick scoot around the markets with some of the crazy things that's happening out there. Lots of interesting markets, lots of volatility. But I want to focus on today two small things. Well, actually, they're not small things. They're pretty big, but two key things that are going on at the moment. So some of you may have seen the unemployment numbers last week in the United States. And remarkably, they were touted as being some of the best there's been for quite some time. This to me is very interesting, but has absolutely no relevance when you look at the leading indicators out there in the States, right? So if that is the case, if more and more people are getting jobs, why is consumer confidence so low? Right? It is absolutely through the floor. And for the record, when you look at the volumes of transactions for durable goods, so also think about things like cars and stuff like that, the volumes, not the value, but the volumes of those transactions are falling away very quickly. I am beginning to believe that I think right now the US may be in the very early stages of an initial move to recession. I say this with lots of caveats because we're not there yet, and unemployment is a lagging indicator, so it will come along for the ride at the very last minute. In the meantime, there's some leading indicators which are clearly turning down, and I don't think that, I'm pretty sure that inflation and what is going on in the rest of the world has got quite a bit to do with it. Americans overall are a grumpy lot at the moment, and they seem to be expressing that grumpiness by either not buying things or by really preferring to sit at home and not do anything at all, maybe because they can or they can't afford it, sadly. So there's lots of things happening in the States. I think inflation is biting, not a good story there. So how do we know, right? What is the indicator out there that's telling us, right, that something like that is going on? Well, this is the US Treasury bond yield, the 30-year US Treasury bond yield, simply the most important chart on the whole planet. Why? Because it sets the interest rates for assets worldwide. So higher interest rates, asset prices fall. Lower interest rates, asset prices rise. Okay, so what is going on in the world? What does the leading indicator tell us? This is Friday's price action and also some of the price action from the previous day. Look at what has been going on in our land. So this is yields down, prices up. Interest rates down, not up, on the back of an amazing unemployment figure. How can you have this, right? How can you do so well with an unemployment figure and then completely reverse in the later on in the session and then see interest rates going down? Well, it's because the market is looking through that unemployment number to what's next, and what's next isn't as pretty. Okay, so when we look at the very short end of the interest rate market, and this is the implied interest rate for June of next year, so June 23 in the Eurodollar market, we are seeing, and it's again here the inverse of price, right? So as prices fall, yields go up. As prices rise, yields come down. You see here, this is a interest rates rising in the short end. Everybody who reads the newspaper understand exactly what I mean by that. And then on Friday, we saw another big leg down as a result of that so-called high unemployment number. So what's happening here is that curve is shifting. Okay, the US interest rate curve is starting to shift around and go flat to slightly inverted, pivoting around about the 3 to 5 year mark where it's starting to go inverted. Okay, so for those who don't know what that all means, please look at one of my podcasts I did about 3 months ago when we talked about the shape of curves and why it was important and why inversion of the curves is a precursor of problems in the economy. Again, it doesn't take a genius here. Inflation's running rife in quite a few countries. People are not as rich as they used to be, and that bothers them, right? And in some cases, the poverty levels are actually getting quite crazy. So, without wanting to labour a point, I think probably there's some quite bad things going on in economies around the world at the moment, notwithstanding what's happening in Central Europe, that is giving us cause for concern. But at the same time, the central banks are happily going on their way, raising short-term interest rates in some kind of I don't understand what's going on type of way, right? So, lots happening. Really interesting story. Let's watch these ones. Why are they important? Okay, they're important because the US Treasury bond, this is a seasonal time for prices to start to rise, yields to start to go down. There is a cycle point coming at the beginning of April. That's the reason why I quite like the look of this now. So I'm looking for an opportunity to perhaps get involved in the Treasury bond market. I'm also looking for these short-term interest rates here, the Eurodollar ones you see in front of you, to stop going down. How would I know that? Well, we could use some kind of bullish momentum divergence to give us a bit of a clue. The market stabilizes for a bit, or just use the old technical watching a chart and seeing what happens type of thing, right? Looking for some false breakouts. That's one thing I want to talk about, Geoff. The second thing that is going on, and this is super, super important, and you have to conceptualize this a little bit more closely. I'm going to go to a monthly chart here. So why am I going to monthly charts, you're going to ask? Well, this is Chinese yuan against the Japanese yen. Not only are we trading at levels where the Japanese yen is the weakest it's been since 2016, it's also the weakest it's been since something crazy like 1980. Okay, just incredible charts of where the market is. There is going on a movement, a realignment of currencies that you have to be aware of. And we'll look at another couple in a second, right? A realignment is taking place, okay? How is this important? Well, when one currency devalues its currency, it's doing it to maintain the economic growth that it has in the country. What happens to the country that is revalued up against it? Well, that suffers, and that has less economic growth simply because the competitor is able to take more, export more into the other country because its goods are effectively cheaper. So when you look at this, this is good for Japanese growth, bad for Chinese growth. At the time when the Chinese market is already potentially struggling from some other issues going on in the credit markets as well too. This is going to make a new interesting play very important. Right, and of course it's China's closest economic trading partner, and there's a significant volume of goods that flow back and forth between the two of them. This is a very important shift that we're seeing. Okay, you need to look at the central bank statements for the Bank of Japan, and also, for that matter, the Swiss National Bank as well too. Recently, you need to understand what the Swiss were saying, because Euro Swiss on the monthly chart, right? This is the euro against the Swiss franc. The Swiss franc is trading at its strongest point for goodness knows how many years. I mean, I don't know, 10, 20, 30, 40, something nuts, right? It's even getting down to the lows of that Swiss franc flash crash that we had a few years ago, for those of you that remember that. Okay, so all of these things are important. What is this saying? It's saying this is the reason why the Swiss National Bank left interest rates unchanged at minus 75 basis points, minus 0.75%. They left it unchanged. Why? Because they are thoroughly hacked off that the Swiss franc is continuing to rise against all other currencies. Why? For exactly the same reason as we saw with that Chinese yuan, Japanese yen chart, okay? Why? Because the Swiss franc is strengthening. That means that industry in Switzerland is not as competitive against its competitors in Germany and other parts of Europe. So consequently, Swiss economy does poorly, European economy does better. What is happening is the flows are all going to Switzerland because they have a lower inflation rate. The currency is naturally stronger than all the other lot who are depreciating like crazy. And the EU, I think, are going to have inflation at 7%, I think, later on this year, which apparently is the highest rate it's been since the 1980s, right? Insane levels of inflation. Okay, so lots of change coming, guys. Lots of things happening out there. Geoff, I'm going to wrap it up there. But this is why looking at your monthly charts from time to time is super, super, super important. There are economic changes in place here. And boy, oh boy, is there a potential buy in the Swiss franc coming up without a shadow of doubt? Is there a potential sell, right, in that Chinese yuan, Japanese yen? So is the yen getting cheap? Yeah, I think the yen's getting cheap too. Let's look at our seasonals, guys. Look at the cycles and see where they're starting to think about bottoming for some signals to think about maybe these trends reversing. Maybe. I always put a maybe because we have to see the price action first. But that's just a couple of things I wanted to highlight to the team, Geoff.
Cheers, mate. That Euro Swissy chart is the first chart I'm going to have a look at in a few moments myself because of the exact reason that you just mentioned. In 2015, shall we ever forget that day when 3,500 pips, I think, when they just decoupled the euro and the Swissy, it just went kerbang, and a lot of people suffered. A lot of people, well, a few people probably did very well from that, but that was a day and a half, I can tell you. And I do believe that we are pretty much bang on the level where that the retracement after that flash crash, as you called it, actually stopped. I think is a very significant level, and I'm 100% in agreement with you. I think there's a potential long coming on that pair. Thanks, mate. Much appreciated. There he goes, back into the depths of Auckland autumnal weather, which I'm sure will be fantastic as it is here in Tasmania. Okay, let's go with the escapade Antipodean style and call in Ainslie, who actually I didn't have a look at the gold chart, but I've got a funny feeling it was like most of the charts I've looked at on the weekly basis. She was up, down, all over the place and going nowhere. Ainsley.
Geoff, it's been one of those situations, and unfortunately, the most volatility was around the invasion of Ukraine, and then the rest of it's just all sunk back into mediocrity, I'm afraid. So let me just grab a chart. Why is that happening?
Please do. I guess you'd expect that, wouldn't you, of gold in a war?
Yeah. Look, we've got back into the whole why isn't gold the safe haven, and why are things like the Swissy increasing and the Swiss National Bank getting a little bit, as Jules said, hacked off? Because it's, why can't I share my screen? Hang on, there we go. Dear. Okay, let me move you over here so I can see what I'm doing. And it's that kind of thing. It's just why is that the state? I mean, oh, oil, wrong chart. Sorry, guys. Let's just go back to the gold. And I know anybody who's been looking for gold for a little while would just be saying, well, what are we back here again? This is a daily chart, and there we are in a box, and we're as boring as it was for this entire period over here. It just isn't. Look, this is where Ukraine was invaded. This is where Biden decided that that's just not on, and down it came. And we have just been going sideways for the last couple of weeks. Look at down on a 4-hourly chart. It's not what you call exciting. However, with more figures coming out, interesting comments regarding yields, what should be happening there, increases in interest rates, for example, how many interest rate increases have been promised in the US over the next 12 months is still debatable, but we are all looking into ugly inflation, high energy costs that are fueling high food costs and transport costs, and again, just feeding into that whole inflation scenario where what's happening to gold? Gold's just being stable, I guess is one way of saying it. It is not getting excited. It's not being a safe haven. Something like the Swissy has become a bit of a safe haven, but poor old gold is sitting there wondering what's going to happen with interest rates, because it's effectively, it doesn't actually give any yield. It doesn't give you a dividend, unlike increased interest rates on bonds, for example. They go up, interest rates go up. Yeah. So here we are, we've just got absolutely not much to report. Even when you look at all the indicators would seem to indicate, all pointing to the consolidation phase. Absolutely everything. I've got nothing to go on, Geoff. I wish I did. I would like to see a bit of a ceasefire. I'd like to see things to calm down, obviously, but generally speaking, I've got nothing to share as far as, look, we're back into this stupid level of consolidation, which I could literally scream at. But that's the way it is, and that's the way trading goes sometimes. So
yeah, look, I think that's entirely fair. If the market and the charts, in your case, and both in your case, are telling you there's nothing to do, then guess what you do? That much.
You do nothing. I haven't got any bamboo to plant, and I've got we've had a little bit of sogginess up in Sydney.
Yeah, just a tad. Wow.
March in Sydney was recorded as our wettest month ever recorded.
I guess the upside of that is it could be worse. You could be in Lismore or Byron or somewhere.
Byron Bay. And for everybody who knows that Byron Bay is this beautiful, sunny, laid-back resort down on the beach up on the north coast, and its main street was flooded during the week, which is just, I mean, that's a bit scary. But yeah, look, we're dry inside, but gee, the sun came out today and everybody was just beside themselves.
Imagine all the dope crops that got wiped out. Wow.
Up in Byron, yeah, up in Mullumbimby, Nimbin, yeah, very busy.
I'm quickly going to share a couple of charts before we go back to you to talk about the black gold. And as I said, the first of them is going to be Euro Swissy. Now, as I said, with Julian, and Julian pointed out, I think it was actually the 1st of January, if I'm not mistaken, where this bar formed. And as I said, it's about 3,500 pips over a month, but that doesn't really tell the whole story. The whole story was that flash crash was just immediate. It happened in a period of hours, and we went to 2,500 pips or something of that nature in that very, very short period of time. That to me is very significant. Not so much where the low is, but where it closed. That was deemed, I guess, at the time as fair value for that period of time. And we have only crept below, that's 2015, we've only crept below that once since. And that was, what, 4 weeks ago? If memory serves me correctly. But now, and Julian was talking about false breaks, that looks very much like a potential false break to me. Now, I guess on an ordinary and uncomplicated basis, I would simply put an entry above that bar and put my stop loss below it. Had I done that, I'd be in a world of pain now. So I think it needs to be a little bit clearer to me that this is indeed a false break. That would probably take place with a break of something like this trend line, I guess, and certainly, pardon me, the horizontal level, more succinctly or more definitely than that. If I were to see a big bull bar come up and then get a pullback, I think that would be the time that I'd look to trade Euro Swissy long. But it's not there just yet. Weekly chart is looking game changer, as I call them, where we've had a higher high than the previous week and we've closed on or near the low. That's suggesting there's going to be a little bit of downside in the upcoming week. That's entirely possible. I think I'll be staying out of that for now and waiting for price to consolidate above this level, which is around about the 103 mark, then pull back to it, maybe give us an entry that way. On the same theme as we're at strong resistance or support, this seems to have broken same. Pound yen. Now, Julian was speaking about pound yen. I want to go back and have a look at that and analyze exactly what he was saying. But to me, this looks very much like it's on its way, and I can't jump in right now. But last week's bar, again, is the game changer bar, which suggests, again, that there'll be some downside before anything else happens. Look, I can see that there could be a false break of this breakout pattern, no question. It doesn't look like that, I've got to say, on the bigger picture. But on the smaller weekly time frame, other than the monthly versus the monthly, this does look like it's potentially broken out of this range. And as we all know, a lot of these range breaks are false, and this could well be one of them. I don't want to jump into it, I've got to tell you. But if this is a false break, then potentially there's the point at which this will become a false break. And is there enough room to get some money out of that if you take a big stop loss? Answer no. But if it does come back into this range, then a lower high might be an interesting ploy. Kiwi yen is also a game changer bar, and exactly the same chart really at the end of the day. The breakout from this level has been very, very strong. Didn't last at the 87 mark for too long, has come back. I can't trade this. It's one of those things I call NLNS, which means no long, no short. I need to see more information. And the game changer bar, therefore, doesn't make sense to me. The game changer bar doesn't appear on dollar CAD, but it is one that's interesting to me this week. The reason is that we're at the bottom of this range. We've also got the potential for this to be another higher low, and I know there are quite a few sitting there, but the range is clear to me and we're at the bottom of that. And if I can find a way into this to trade it back up to the top of that range in the first instance, maybe as a breakout, hanging on to a little bit of the position, if I take it, then that would make sense to me as well. The two I'm most interested in for the week, however, have GBP in front of them, and I think Julian was talking about it as well. Look, the pound is oversold at this point, as far as I can see, and I'm sure you'd agree with that. What is this? The weekly chart: 2, 4, 6, 8, 9 weeks in a row that has sunk to its knees, pretty much. At this point in time, if I go a little bit wider onto the monthly chart, you can see this level here is absolutely important, around about the 1.89 mark, and this monthly trend line seems to be a nice confluence area. I'm dead set keen to trade this. Look, I'm not sure if it's going to go long or short, to be fair, but I'll have to wait and see what happens in this vicinity. Definite launch pad for either the short or the long, in my humble opinion. I have been watching it very, very closely over the last few days anyway, certainly into last week, and I'm just waiting for a signal as to whether this is a bounce point or it's going to break and give us more downside. I prefer to think that the strong support level will launch it into a rally, but we'll see on that one. It is exactly the same at a very, very strong support level. I don't know that I'm as keen on this one as I am on pound Kiwi, to be honest, but the level's very, very strong, and I am expecting there'll be a bounce at this point. And we may even have had that on the weekly chart there. We don't see it too clearly, but we've bounced below that 121.25-ish level. I think we can get back up to here with a bit of a rally and put in a higher low. That looks like a trade to me, back up to this level here, or certainly to this level, to get some profit in the bank, and then we can look to go back up to the 124 mark. I think that makes sense to me pretty much, and that's what I'll be looking for in the coming week. So that's my technical overview. That's my 2 cents worth for the upcoming week. Let's hope we can find something in that makes sense and makes money, more importantly. Speaking of which, plenty of money going into the petrol bowsers at the moment, and I wonder what oil does next, Ainslie. The Australian government's halved the excise on fuel.
Yeah.
I wonder, will these service stations play ball and give us that back?
Why would you think?
Maybe just because I'm a conspiracy theorist.
Yeah. It's amazing that they've got that button that changes the prices when oil goes up before it's actually shipped and imported to Australia. But when those same prices come down, it seems months and months and months to find that button to reverse the prices. It's just
takes a heck of a long time to get that fuel to the bowser then, doesn't it?
It does. It's a long slow ship from Saudi, isn't it? Or Russia.
Totally.
But here we have, and one of the things that, look, it has stabilized. Oil has stabilized. US oil, WTI, has stabilized just under the $100 mark, and that has stabilized because President Biden released reserves, and they do that to flood the market. They flood the market, and we can see the effects of that coming down on Thursday. And it's just one of those things. The other thing that they're saying that they've overestimated the US demand for oil at the moment. Now that's in stark contrast to UK oil demand, which is actually quite high because of temperatures, etc. But they're saying that the US estimations are off. They're too high. They've stabilized a little. Now, obviously, we still, again, like gold, really need some kind of stability with the Russian-Ukraine situation, because at the moment this chart is getting very close to really hard to trade. And I've got to a point where I just like, you can't. It's very fundamentally based, and what I'm saying is all it needs is somebody to make a comment and it turns around and goes the other way without any regard to a technical level. It will find the levels, it will bounce off those, as you can see here, as we had last week. But seriously, she's been really hard to trade. There is no decent setups, and lots of spinning tops towards all on Friday, where it just couldn't make a decision and didn't know which way it was going to go. So for the time being, at the moment, I am just sitting pat on this one, Geoff. I've got nothing more to say on it because we've had a week of the last couple of weeks have been really tough trading. No direction. I'm back down to consolidation, as you can see. Just like gold, it's just honky-dory, I guess.
Yeah, look, speaking not of oil, although it's not far away from oil, being close to Kernel, I suppose. Well, it's not that close to Kernel. But what person goes out in the ocean off Sydney in a dinghy yesterday?
Good question.
I think it was yesterday. I think the answer is probably a dead one at the moment. But yeah, have they found that person?
Look, there's a few people doing stupid things at the moment, and we've got very high tides, and it's and this is my sailing kicking in. We've got Easter. We're coming into Easter, so it'll be a full moon. So we're going into the waxing and the waning of the moon. So there's
that's what it's all about. Mm-hmm.
The oceans are playing havoc. The weather has been playing havoc, as you know, and people are just doing stupid things.
Yep. Well, as I said, it may have been near the oil refinery at Kernel, but all I can say is get far from Kernel.
Yeah. Unless you're going to Mascot, of course. That's plain.
That was far Kernel. You got that right.
Yeah, got it. I'm
Right.
I was trying to dodge that one, but
I thought you might have been,
no.
but I can't help myself, you know.
I know. But yes, unfortunately, I've got nothing exciting to say about an oil chart, or that I have been excited about an oil or a gold chart this last week. It's just been very disappointing all round.
Patience is a virtue, they tell me, and we've got to have plenty of it. Let's hope that all unravels come Tuesday morning. It probably won't tomorrow, but come Tuesday morning. We've got an RBA statement on Tuesday. May cause a few kerfuffles around the place, especially if Philip Lowe says, okay, maybe it's this year, not 2024. We'll see. Have a great week, eh?
Will do. You too. Thanks, everybody.
And thanks, Jules. Thanks for popping in. Thank you, everyone, for being in attendance. We look forward to your company in many of the shows throughout the week, which most are free. Enjoy your week and have a great trading time. Bye-bye for now.